Our favorite US president has just unveiled fresh global tariffs, and many are worried that this will harm the watch market. For those that are unaware, I used to work as a macroeconomist in private equity, and currently help to run a gray watch dealer platform called Legacy Watch Co. that specializes in independent watches. Today, I'll be giving you my honest thoughts on why the watch market might be screwed. Before we dive into the impact on watches, I'll quickly cover the basic assumptions so you don't fall asleep. Based on my understanding, watches produced in Switzerland will be subject to a 31% tariff. There's also a separate 10% baseline tariff on top of this, which applies to even countries with existing free trade agreements with the US. So if we export a Swiss watch from Singapore to the US, customers will pay an additional 41% in tax as compared to before. So what exactly is the impact on the watch market and who will be impacted the most? From my point of view, there's the retail side of things and the gray market side of things. For US collectors, Swiss watches are going to become a lot more expensive at retail. Specifically, those who import watches into the US will be subject to large tariffs. In a recent case like the MAD 2 raffle, mb&f sent out an email saying that US customers will be responsible for the additional tariff. This is typically the standard when an individual buys and imports a watch from overseas. I imagine that in the case of ADs, they will be passing on the heightened tariff costs to the consumer, thus making watches more expensive at retail. Interestingly, watch dealers in the US are responding to the situation by raising the asking prices on their inventory. This makes sense to do since retail prices are likely to increase, and stock from overseas competitors is now subject to additional tax. We know that some local watch dealers in Singapore that sell a lot to the US are very worried, since this will harm their business. Ultimately though, what I'm most interested in as a watch dealer is how market prices will be impacted. Everything I've talked about up to this point has been focused on the supply side of things. We know that US retail prices are likely to go up, and US dealer asking prices are increasing as well. But the question is, what about the demand side? Will people actually be willing to pay these heightened prices? As we know well, asking price and transaction prices are totally different, and it's currently hard to tell whether transaction prices have risen. Let's speculate about things from a collector's point of view. If I'm in the US and I want to purchase a watch, I have two options. Firstly, I can purchase it locally at a higher price, or secondly, like we see with some of our clients, I can fly overseas to pick up the watch myself. We've had overseas collectors come pick up watches from us in Singapore, whilst others ask us to ship it somewhere tax-free like Hong Kong. For context, most of the watches we sell are niche, high-end independent brands that go well into six figures. This Black Label Resonance, for example, is about $500,000. 10% of $500K can more than cover a very nice plane ticket and hotel stay, so it would warrant you flying out for it. But using a more normal example, let's imagine that a US collector found a Patek 5712 for around 100 grand in Japan. It would probably still make sense for them to go pick up that watch themselves instead. Overall, I imagine that market prices of watches in the US could rise slightly in the short term, before stabilizing to some sort of equilibrium, depending on the willingness of customers to travel and buy overseas. Of course, I think the majority who buy watches like Rolexes or Tudors may not want to deal with that hassle and would pay a premium locally. But another possibility to consider is that US collectors may not be willing to pay these higher prices and could hold off on making purchases entirely. I covered this a bit in my previous video, but essentially we're seeing demand for mainstream hype watches really drop off this month. Sentiment in crypto has been pretty bad for a while, and fear levels in the stock market have risen to a degree not seen since COVID-19. Poor economic conditions and market uncertainty really impacts the desire of these consumers that purchase these mainstream watches. When people feel unsafe, they are much likely to drop 100 grand on a steel sports watch that they don't need. Another thing to keep in mind is that if these tariffs are a long-term measure, it will hit the global economy in a big way. The first US-China trade war happened in 2018, not too long after I joined the market. And as an analyst at the time, I remember that people were extremely worried. Aside from GDP forecast downgrades, there were also a lot of concerns about things like supply chains needing to be restructured. If you compound this on top of a global economy that has been battered with high inflation, plus extreme fear in financial markets, I can easily see demand for a steel luxury sports watch dropping even further. All this is important since the US is known as perhaps the largest market for things like Rolex. So there is the possibility that even if retail prices and gray market asking prices go up, market prices may not move up together since watch demand drops. But more importantly, long-term tariffs would cause great economic uncertainty, as reflected by reactions in global financial markets. As a result, this has the potential to drag down prices of mainstream watches on a global scale. The final topic I'll touch on is the impact for us and the independent watch market. If you missed my previous video, I'll sum it up by saying that the independent watch market is fundamentally very different from the mainstream market. Collectors are generally much more passionate about horology, and supply is also highly limited. For example, we have an overseas client coming to pick up this Reuben Schutz Series 1. Only 6 pieces of this watch were made, and it was reserved within 24 hours of posting. When it comes to super rare watches like this, or very expensive pieces, I ultimately don't think there will be too much of an impact. Collectors in this market segment are much more sophisticated and buy largely out of passion. For them, the pleasure is in the hunt. And if they find that one specific watch they've been hunting for finally pop up on market, they will go out of their way to buy it. I think even when you talk about the retail aspect of these watches, you will see a similar phenomenon. Someone that is sophisticated and wealthy enough to purchase a 6-figure watch from an ultra-niche independent watchmaker will be capable of making a trip to pick up the watch themselves. And I imagine that larger brands like a mb&f may encourage US clients to do so as well. Also, based on our experiences over our last year of operation, our customer base is quite well diversified from a geographical standpoint. The Middle East has been a key market for indies, and we also see a lot of demand from Europe and North Asia. My sense is that US indie collectors tend to prefer purchasing locally in the first place, due to factors like tax and dealing with customs. So let's summarize the impact of tariffs on the watch market. My personal opinion is that there actually won't be too much impact, but for a different reason. I feel that the tariffs are more of a short-term negotiation tool rather than some permanent structural change. If you look at the first US-China trade war, it was more of a means to an end. This time around, the tariffs are so much more widespread and in some cases, a violation of prior agreements. So I wouldn't be surprised if we see a quick revision of some of these measures, especially if some countries concede quickly and it can be used as a political win. Of course, I could be wrong as well. If I am wrong, I think the mainstream watch market will see a drop in prices due to the economic impact and uncertainty tariffs will cause. Aside from the clear impact on global equity markets, there are also some considerations like how the Fed responds and changes in FX. But ultimately, I think the mainstream market will drop, along with some of the weaker indie brands with high supply on the gray market. However, I think the really rare and collectible independent pieces are likely to be more resilient due to extremely limited supply and the differing nature of demand. What I find pleasantly confusing is that this segment is being filmed on 8th April, and we're still seeing good sales even as global equities and crypto face huge declines. The Black Label Resonance, which is the most expensive watch we've had, has just been reserved. We also have clients making payment for a de Bethune and Parmigiani, and one overseas client is flying over to pick up an ultra-niche independent piece. The previous week also saw 3 indie watches find new homes, so it's clear things are still chugging along. As for who the tariffs will hit, I imagine US retailers will suffer. Also, it probably won't be very much fun being an overseas dealer that heavily relies on the US market. Anyways, please feel free to share your thoughts in the comments. I'm also thinking of doing more videos, but I'm not too sure what you guys want to see. So if you have any good ideas, please feel free to let me know as well. If you're ever in Singapore, do come visit our Collectors Lounge, or visit legacy-watch.com if you're looking to buy or sell a watch. If you enjoyed this video, please like and subscribe as the support makes a big difference. Thank you for watching.